7 must-do mortgage application tips for first-time buyers, how to prepare properly. So this was actually one of the first videos I did on this channel, and to date is the most viewed video. But that was 2 years ago and things have changed since then, so I thought I'd do an updated one. Here are my 7 must-do mortgage application tips for first-time buyers, how to prepare properly, updated. Let's go. Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers. Please do stay with me until the end, where I will also provide a bonus tip to improve your chances of having your offer accepted on a property. Let's get into the vid. Must-do mortgage application tip 1. Your bank statements play a really big role in the way that the mortgage lender will assess your mortgage application. When you submit a mortgage and all of the associated documents, the mortgage lender will pass your file to an underwriter. An underwriter is the person who looks over all of your mortgage application and then decides if they are happy for the bank to lend to you. This is all determined by the level of risk they see you to the bank. Will you pay the mortgage or will you default? Your bank statements are a reflection of your spending habits. If your bank statements have regular gambling spending, the underwriter may see you as a high risk. So here is my top bank statement tips. Don't gamble. Don't spend excessively on eating out. Don't have any misdirect debits. Don't deposit large cash sums. Don't have transactions which could cause confusion. Don't have transactions with funny references, you know the ones. Make sure your salary is paid into your bank account and it reflects your payslip. Don't save your deposit in your main current account, as this creates extra work or time to verify each pound you have saved towards your deposit, as your proof deposit needs to be evidence. Must do mortgage application tip number 2. This tip will never get old, as it is always one of the first things you need to do, especially before applying for a mortgage application. By following the tips within this video, you can almost guarantee mortgage success if everything is prepared from the outset. Preparation is key for mortgage success. Check your credit files. Notice I say credit files. Grab your free Check My File credit file, which has all of your credit files from all of the different credit agencies in one place, therefore saving you the time and hassle of downloading them all individually. You can download the file for free by scrolling down to the bottom of the page and selecting Download Printable Report. Save this as a PDF. The report will be password protected and you will require your date of birth to open it. You can cancel at any time within 30 days at no cost, and it is £14.99 per month thereafter. Check you are on the voters roll across all of the credit agencies and make sure there are no items that you are not expecting, such as missed payments and defaults. I've done a whole video on how to check your credit file in 60 seconds. I will hook this up on the end card at the end of the video. Don't go into your mortgage application blind without checking all of your credit files, because it is so common to have mistakes, and the most common I see is voters roll records missing. Mortgage lenders rely on your credit file to have the correct address data, and the voters roll does a fantastic job in pulling this through. I would also fully recommend making sure you have your correct address showing on all of your credit commitments within your credit files, and for those of you that have your bank statement sent to your parents' address, just get that changed as quickly as possible. It just causes confusion in your mortgage application. If you have sent them to your parents' address because you don't want them sent to where you are, or maybe you are in a house share, I would still change the address, but just get online statements, as these online statements will be accepted by banks as long as they have your name, address and account details on them. Must do mortgage application tip number 3. This is to do with your mortgage documents. Get them all together early doors. You're going to need either a passport or driving license to prove your identity. If you do not have either, get it sorted, and certainly do not apply for a mortgage. You're going to need to prove your address. If you are renting, then a utility bill within the last 3 months, not a mobile phone bill. If you live with family or in a house share, then a bank statement within the last 3 months with your address on will do the trick. Proof of income, the last 3 months payslips and 2 years P60s. Not every lender will want the P60s, but I would still make the effort to get hold of them, as it is better to go through that now rather than during the mortgage application. Lenders like Nationwide often request P60s. If you would like to use an annual bonus, then most lenders will stipulate you need to have been paid a bonus for the last 2 years with the same company. You will need to supply the pay slips with these bonuses on in order for the lender to take them. They will then average out the last 2 years' bonuses and use that as your bonus income. For monthly bonuses, monthly commission, overtime, the lender will average the last 3 months worth of pay slips. If you are an NHS nurse, for example, that does bank overtime. And by the way, big shout out to the NHS nurses. Thank you for supporting this country when it needed you. You will need your pay slips from your main role and pay slips from the bank position, which, as you know, will say NHS Bank. If you are a contractor, you could be set up self-employed, limited company, umbrella company. Maybe you are a CIS worker. Just always keep the corresponding contracts, accounts, self-assessment returns, pay slips, whatever it may be, which will include SA 302s and tax year overviews for the self-employed. And the general role is that if you have a track record in these positions, that is going to help you. If you have just come out of an employed position and now you are going into a self-employed or contracting position, especially if it's in a different industry, it's going to be hard to find a mortgage lender. Most lenders want the previous record reflecting the current setup. Contractors sometimes require up to 12 months, 2 years previous contracting experience. You just need to check the mortgage lender's criteria. Bank statements. They will ask for 3 months salary credited bank statements, and sometimes they will ask for 3 months worth of a different account if, say, you have direct debits out of another account, so have them spare as well. And by the way, please do download our new first time buyer pack, which does include a documents download checklist, so you can have everything on one page and tick off each document as you go. The link's in the corner of the screen or in the description below. Proof of deposit. The best way to save for your deposit is by depositing an account or an ISA or bond. Do not use cryptocurrency, and remember that the lender will require you to prove every single penny of deposit and where it's come from. So there needs to be a clear trail left on bank statements. If you're being gifted any deposit money, then the donor will need to supply their bank statements proving where their funds came from and showing the transaction into your bank account. If grandma doesn't want to give you her bank statements, don't take the gift. Some of the older generations seem to think if you have more than £5,000 in your bank, then the government will take it away. There is also a gifted deposit template in our first time buyer pack. If you want to know the wording, mortgage lenders require anyone making a gift is to confirm in writing that the gift is not a loan, it does not need repaying, and that they have no interest in the property. Our template has all the special wording that you need. Must do mortgage application tip number 4. Be 100% honest on your application. Don't guess things. Put the effort in to find out the date you started in a particular employment, or work out how much overtime you have had over the last 3 months. Don't guess. Put the correct expenses on the application. Remember to include deductions for pension contributions. This is the pension contributions that you make, not the employer. Maybe you pay a student loan or some type of company loan back. Your pay slip will have all of the deductions, and these must be reflected. Otherwise, this could reduce your loan amount once the underwriter starts looking at your application if you haven't included it. Also, try and avoid putting in multiple applications at once. Mortgage lenders do have a system and they can work out if that's what you're doing. It's okay to go from one lender to the next. Maybe one lender won't lend on the property you're buying, so you need to go to another one. That is fine. I'll say it again, preparing is the key to mortgage success. If you take your time with this and do it all correctly, you're going to feel more confident about the process. If it's all a last minute thing and you find a property and apply for a mortgage and you've still got all this stuff to do, the process can come at you quickly, creating worry and anxiety. Try not to put yourself through that. Must do mortgage application tip number 5. Be aware that these are the 3 main areas that an underwriter will be assessing when deciding whether to lend to you. And these 3 areas carry the biggest weight within a mortgage application. So if you can get these right, your chances of success will improve. Income and employment, debt to income ratio, financial conductivity. Income and employment. So try not to borrow the very maximum if at all possible. If you need to, then make sure your debt to income ratio is not high. I will come on to this in more detail in a second. Continuous employment history. This is what lenders like, as your employment relates to the chances of repaying your mortgage back. So if in the last year you've had 7 different jobs with gaps in between 5 of them, then your source of income is going to look unreliable. So just do your best to get at least 6 to 12 months continuous employment history behind you with no gaps. I like 12 months best. Debt to income ratio. If your income was 50,000 and your debts are 25,000, this would mean your debt to income ratio is 50% because your debts equal half of your income. Anywhere above 40-45% and the lender may decline your case based on a high debt to income ratio. I like to try and get that below 20% if possible, otherwise this could affect the amount you need to borrow and reduce the loan amount significantly. Financial conductivity. So this goes back to the bank statements. A lender could request more bank statements at any given time within the mortgage application. So it's a really good idea to conduct your financial side as well as you possibly can, especially in the lead up to a mortgage application. Must do mortgage application tip number 6. Write down all of your income and expenses. This would include the expenses that you estimate on your new property, such as council tax. It's easy to find out what council tax costs are. You can check the council tax register for council tax expenses and bans and that sort of thing. Then after deducting all of your expenses from your income, this should give you an idea of what you are left with to go towards your mortgage payment. So when you get your mortgage quote, you have a feel for the affordability and whether you feel comfortable with that situation. Must do mortgage application tip number 7. Make sure you instruct a solicitor that is on the panel of the mortgage lender you are using. This is such a common mistake to instruct solicitors without checking. This can create a whole heap of problems later on down the line, especially if you have already started your searches. Just go to mortgagechain.co.uk, select quote and solicitor quote, where you can obtain a free solicitor quote from solicitors that will be on the panel of your chosen mortgage lender. All you need to do is select the mortgage lender you are using and it will provide quotes based on solicitors that are on your mortgage lender's panel. The panel we use are some of the most popular and common solicitors that specialise for first-time buyers, so they can handle all your gifted deposits and ISAs and collecting bonuses and all that stuff. It's completely free to use. Please just make sure you are subscribed to the channel. Full instructions are provided on the website. Bonus tip. So when you place an offer on a property, make sure you supply the estate agent with your agreement in principle certificate and proof of deposit from your bank statements. This will really solidify your offer, as most people only provide the agreement in principle details initially. On top of this, if you can also submit a quick 30-second video and ask the estate agent to pass it on to the vendor with the reasons you are putting in your offer and why you love the property, then this could create a connection with the vendor, especially if you are complimentary about the property in the viewing. I did do a YouTube short on this subject, which I will let play towards the end of this video, literally in about 30 seconds time from now. Check it out. Today's question: I would love to know if this video has helped you prepare for a mortgage application. Please let me know in the comments. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up repayments on your mortgage. So thanks for watching today's video. Hope it's provided you with some useful tips. Please do check out the show notes below for a recap with access to any of the links discussed today. Please do consider subscribing. Really does help the channel, and click on that all notifications so you can get details of our latest videos and help us get our message to more first-time buyers. I've been Alex Kerr, providing the best tools and tips to first-time buyers. See you in the next one. How to make your offer stand out in a crowded property market. 1. When viewing the property, show the seller how much you love the property with positive comments as you view and positive body language. 2. Ask the seller or agent what the most important element of the sale is to the seller. For example, do they require speed of sale? 3. When placing your offer, provide your offer in a letter and video format and ask the estate agent to forward this on to the seller. Include the reasons why you love the property and that you can help them out in their most important element that you found out in part 2, i.e. you are a first-time buyer and can complete in 8 weeks if they require speed. 4. If you are offering over the asking price, don't go above 5% of the purchase price, as you risk a down valuation, and make sure you have the extra funds available if the property is downvalued. Clarify this in your offer that this is the maximum possible offer before the risk of down valuation occurs, and if this does happen, you have the extra funds available personally. Good luck.